March 2023. One of the world's largest banks was about to disappear forever. In just 48 hours, Credit Suisse would lose $56 billion in value, more than the GDP of 120 countries. But how? Credit Suisse wasn't just any bank. Founded in 1856, it helped finance America's railroads, survived 2 world wars, and became Switzerland's second-largest bank. By 2023, it managed over $1.6 trillion in assets. But beneath this prestigious facade, a perfect storm was brewing. Years of scandals had already weakened the bank. $5.5 billion lost in the Archegos collapse, spying on their own executives, money laundering for drug cartels. Meanwhile, worried customers were silently pulling out billions. In just 3 months of 2022, they lost $88 billion in deposits. But in March 2023, this slow bleed turned into a hemorrhage. Credit Suisse was bleeding $1 billion in deposits every day. They desperately needed cash. But when they turned to Saudi National Bank, their largest investor, they hit a regulatory wall. You see, the Saudis already owned 9.9% of the company at that time. This means they couldn't inject more money without crossing the 10% ownership threshold. Crossing the 10% ownership mark would trigger strict European banking laws. The Saudis would face extensive financial audits, personal liability for bank losses, additional capital reserve requirements, intense regulatory scrutiny of all their operations. In a fateful Bloomberg TV interview, Saudi National Bank's chairman was asked if they'd provide more funding. His blunt response, absolutely not. Those 2 words, broadcast live to the financial world, sent shockwaves through the market. The bank's stock plunged 24% in just hours. Clients began pulling out their money at an unprecedented rate, $10 billion per hour, $6.6 billion in market value vanishing every 60 minutes. Worse than the 2008 financial crisis, with the entire global financial system at risk. Swiss authorities had 48 hours to prevent catastrophe. Their solution? Force Credit Suisse to merge with their biggest rival, UBS, for just $3.25 billion, 60% less than what it was worth just days before. Why did they settle for such a poor offer, you may ask? But what you don't know is this: the Swiss National Bank stepped in, extending a CHF 50 billion liquidity line to stabilize the situation. But this measure was ultimately insufficient as confidence in Credit Suisse continued to collapse. In just 2 days, a 167-year-old banking giant ceased to exist. But the real question remains, could this happen again? And which bank might be next?